Something just changed in XRP that matters more than it looks. While most of the market is focused on whether the Clarity Act passes, the CFTC is signaling that crypto market structure could move forward even without new legislation. In the next few minutes, we'll break down exactly what the CFTC said, what existing authority it could use, why Ripple was in the room, and what this could mean for XRP's role in the evolving U.S. financial system. Something changed in Washington that the crypto market may be underestimating. The CFTC has made it clear that it wants crypto market structure to move forward, with legislation if possible, but potentially through existing regulatory authority if Congress remains stalled. And this isn't just about another regulatory speech. The CFTC has directed staff to explore how crypto exchanges could potentially operate under a new type of designated contract market structure. It's massive, including rules for leveraged and margin crypto trading. But here's where it gets interesting. The agency is also engaging with on-chain finance developers to explore legal and compliant pathways for DeFi in the United States. And sitting inside that conversation was Ripple CEO Brad Garlinghouse. So the key question isn't simply whether the Clarity Act passes. No. The bigger question is whether the regulatory architecture for American crypto already being built. Ladies and gentlemen, if you want the solid perspective on XRP and crypto and want to cut through the daily chaos and noise, subscribe to the channel. I break it down simply so you can see what actually matters in the markets. And thank you always to everyone who likes and shares each of our videos. These two things really do help out the channel. Look at who was in the room. Now, here's where this gets really interesting. Because if you want to understand Washington's intentions, don't just listen to speeches. No. Look at the people being invited into the room. The CFTC's Innovation Advisory Committee includes major figures from Coinbase, Ripple, Uniswap Labs, Chainlink Labs, Kraken, Gemini, Robinhood, Cripple.com, Solana, Labs, NASDAQ, CME, CBOE, BTCC, Franklin Templeton, Grayscale, and major market infrastructure firms. And yes, Brad Garlinghouse is officially listed as a member representing Ripple. See, that matters. Not because being invited to a committee automatically means Ripple controls policy. It doesn't. And we shouldn't pretend it does. But it does tell you something about who regulators want sitting at the table while this new framework is being discussed. The CFTC isn't holding a crypto meeting in isolation. It's bringing in exchanges, infrastructure providers, traditional financial institutions, DeFi builders, tokenization companies, market makers, and blockchain companies. This looks much more like an attempt to construct a financial market framework than a simple regulatory hearing. Write this down. This is massive, ladies and gentlemen. See the big statement? Now let's get to the statement that has everybody talking. Chairman Selig said he remains hopeful that Congress will pass bipartisan crypto market structure legislation. So this is important. He did not say Congress is irrelevant. In fact, he explicitly said legislation would be the strongest way to future-proof the industry. But then he described what happens if clarity continues to stall. Selig said the CFTC would use its existing authorities to begin establishing a regime for crypto asset markets. Then he went even further. He said, President Trump promised to deliver a crypto asset market structure, and we will help him deliver if Congress will not. That is the sentence. That is the headline. Not because it means Congress has literally been abolished. It hasn't. Not because an agency can simply write whatever law it wants. It cannot. But because the CFTC is openly telling the market that it is preparing an alternative regulatory pathway using existing statutory authority. And staff have already been directed to explore it. This is massive, very important. That's the part that changes the conversation. The DCM structure, why this matters. Now let's slow this down because this is where the technical part becomes extremely important. The CFTC regulates derivatives markets, and one of the core structures under its jurisdiction is the designated contract market, or DCM. Think of DCM as a federally regulated marketplace operating under the CFTC framework. And Selig said the CFTC staff has been directed to explore whether current registrants and potentially crypto exchanges outside the existing regulatory perimeter could be designated as a new type of DCM, called the crypto asset market. Under that framework, crypto trading could potentially include leveraged or margin transactions subject to purpose-built rules and CFTC oversight. Now think about what that means. Instead of waiting for Congress to create an entirely new regulatory universe from scratch, the agency is examining whether existing legal infrastructure can be applied to the digital asset marketplace. Let that sink in. That's so massive. This is a massive difference in speed. And it tells us something about the philosophy inside the CFTC. The question is no longer, how do we stop this new technology? The question is, how do we bring this technology inside the regulated financial system? And this is where history becomes incredibly useful, because this isn't actually the first time financial innovation has collided with regulatory uncertainty. In 1848, merchants established the Chicago Board of Trade. At first, the exchange was simply trying to standardize how commodities were bought, sold, graded, and delivered. Then futures contracts developed. Farmers could lock in prices. Mills could plan their costs. Traders could manage risk. But regulators and politicians didn't immediately celebrate this innovation. The language surrounding these markets was often hostile. Critics excused exchanges of facilitating gambling and speculation. Eventually, federal regulation developed. And in 1974, Congress created the modern CFTC framework, the Commodities Futures Trade Commission. The important lesson isn't that crypto is identical to 19th century commodities. It isn't. No. The lesson is that financial markets often become larger and more durable when regulators move from trying to eliminate innovation toward creating standardized rules around it. Chairman Selig himself used the history during his August 20th remarks explaining how federally regulated exchanges and DCMs helped create the foundation for today's derivatives markets. And now he's arguing that digital assets may represent another frontier in that same evolution. This is so huge, ladies and gentlemen, it's massive. But here's what most people miss, unfortunately. There's a huge difference between regulatory authority and statutory premise. This is where I want to separate the excitement from the reality. A rule created under existing agency authority is not necessarily equivalent to a law passed by Congress. Write that down. A future administration could potentially change that regulatory approach. A future CFTC chair could have a completely different philosophy. Legal challenges could arise. Courts could ultimately determine that a particular interpretation exceeds the agency's authority. And that's precisely why Selig himself still describes clarity as the most important step. So don't make the mistake of saying Congress doesn't matter anymore. That's too simplistic. Congress matters enormously, but here's the structural shift. Congressional legislation is no longer the only scenario being discussed publicly by the regulators themselves. That's the story. Think about it this way. Imagine a country debating whether to build a completely new railway system. Congress is arguing over the final legislation. Everyone is watching the vote. But at the same time, engineers have already started laying foundations under an existing transportation framework. The legislative vote determines how permanent, comprehensive, and standardized the final railway becomes. But the underlying direction of travel has already changed. That's roughly how you should think about the CFTC's current posture. The Clarity Act could determine the presence and breadth of the framework. But the CFTC is signaling that regulatory implementation doesn't necessarily have to remain frozen while Congress debates. And that is why September 15th matters. But it may not be the only date that matters. The DeFi piece is even more important, ladies and gentlemen. Now let's move to something that could be even bigger than exchanges. DeFi. Selig said he directed CFTC staff to envision which developers and engage on-chain finance protocols. The goal, to establish ways for those developers to offer the protocols in a legal and compliant manner in the United States. Write this down. This is massive. I want you to read that again and transcribe that. The discussion isn't simply, how do we regulate centralized exchanges? It is, how can on-chain financial protocols operate legally inside the United States? That is a fundamentally different conversation. Because if regulators can create pathways for centralized and decentralized financial infrastructure to interact with the American financial system, the potential implications extend far beyond XRP. It touches decentralized exchanges, tokenized assets, on-chain lending, derivatives, stablecoins, tokenized securities, institutional settlement, and potentially an entire generation of financial applications. That is why the CFTC meeting shouldn't be reduced to a headline about the Clarity Act. The deeper story is the construction of an American regulatory perimeter around blockchain-based finance. Here's another historical event that really matters. In 2000, Congress passed the Commodities Futures Modernization Act. The legislation helped move the derivatives framework towards a more principles-based regulatory model. Write this down. Instead of attempting to prescribe every possible financial product and advice, the system gave market participants more room to innovate within regulatory principles. Chairman Selig specifically referenced the CFMA during his remarks. And that's significant because it reveals the philosophy behind what he's proposing. See, technology evolves faster than legislation. If lawmakers attempt to define every financial product individually, regulation can become obsolete almost immediately. So one solution is to establish a framework broad enough to accommodate future products while maintaining core protections. That is exactly the type of architecture the CFTC appears to be exploring for crypto. Ripple and Brad Garlinghouse. Now let's bring this back to Ripple, because Brad Garlinghouse wasn't sitting in some random crypto conference. He is officially a member of the CFTC's Innovation Advisory Committee, representing Ripple, and that puts Ripple in a very interesting institutional position. Again, let's be disciplined. Being on an advisory committee does not mean Ripple writes the rules. It does not mean XRP receives automatic regulatory approval. It does not guarantee a specific price outcome. And it certainly does not mean XRP is guaranteed to win. No. But it does mean Ripple is participating in a forum where the future of America's financial infrastructure is being discussed directly with regulators and other major market participants. And that matters because Ripple's business thesis has always been closely connected to payments, settlement, liquidity, and institutional financial infrastructure. The United States moves towards a regulatory system that brings blockchain-based settlement further into mainstream finance. Ripple's core area of focus becomes increasingly relevant. Here is another way to understand this. Think about the early internet. The important question wasn't simply which website would become popular. The bigger question was whether the underlying network infrastructure would become standardized enough for businesses, consumers, and institutions to build on top of it. Once the infrastructure became reliable, an entirely new economic layer developed. Crypto may be approaching a similar transition. Speculation phase asks, which token goes up? The infrastructure phase asks, which networks can become useful financial rails? Those are completely different questions. And that brings us directly to XRP, the anointed one. XRP, what actually changes? So what does all this mean for XRP? Let's separate the signal from the speculation. First, a clear CFTC framework could potentially make it easier for regulated American venues to offer crypto products under defined rules. Second, the CFTC is explicitly examining leveraged and margin crypto trading under a potential crypto asset market DCM framework. Third, the agency is exploring legal pathways for on-chain finance developers. Fourth, Ripple is participating directly in the CFTC's Innovation Advisory Committee. And fifth, the CFTC and SEC have already been moving towards greater coordination around digital asset oversight through Project Crypto and related initiatives. It's important. None of that guarantees XRP price appreciation, no, but it could potentially strengthen the institutional environment in which digital assets operate. And that is the distinction I want everyone here to remember. Price is reacting, the system's evolving. Those are not the same thing. What about the September 15th vote? Now let's address the elephant in the room. The Clarity Act. A lot of people have mentally checked out. Some are talking about very low odds of passage. You may hear estimates around 25%. But remember, a probability estimate is not the same thing as an outcome. And even if legislation encounters another delay, the CFTC's August 20th announcement changes the payoff structure around that uncertainty. If Clarity passes, the CFTC says it's ready to implement the legislation. If clarity continues to stall, the CFTC says it has existing authorities it intends to explore. If Congress eventually passes a compromise later, the agency could potentially shift towards implementing the statutory framework. So there are multiple paths here. And that's what makes this interesting. The markets have been treating the September vote almost like a binary event. Passes equal bullish, fails equals bearish. Write this down. But Washington just introduced a third variable that's so important. I want to hear it in the comments. What do you think is going to happen? Pass, fail, the good, the bad, the ugly. What do you guys think? See, regulatory action can continue even while legislation remains unresolved. That's a much more complicated and potentially more durable story. Here's the real risk. But let's be honest about the risks. This does not mean regulators can do anything they want. The CFTC's authority has boundaries. Rules can be challenged. Interpretations can be disputed. Courts can intervene. Future administrations can reverse course. And even a pro-crypto regulatory framework can create stricter compliance requirements. In fact, regulation can produce winners and losers. Some companies may thrive because they can afford compliance. Others may struggle. Some tokens may gain access to regulated markets. Others may not. Some DeFi protocols may find legal ways. Others could remain outside the perimeter. So the bullish thesis should not be Washington will make every crypto asset successful. That's not what is happening. The more defensible thesis is Washington appears increasingly determined to create a framework under which digital assets can become part of regulated American finance. Write that down. It's very important. This is a much bigger structural statement. Short-term noise, long-term structure. And this brings us to the phrase I want you to remember. Short-term noise, long-term structure. Pay attention to what's quiet. When you pay attention to what's quiet, you get that Gucci conviction, that Gucci clarity. You understand what's happening. You got your market recce. You know. See, the market can dump tomorrow. Bitcoin can sell off. XRP can move sideways. The Clarity Act can be delayed. A court case can create uncertainty. A politician can make completely different statements. All of that is short-term noise. But underneath that noise, something potentially much more important is happening. Regulators are building institutional relationships with crypto companies. Traditional exchanges are participating. Banks and asset managers are involved. The CFTC is exploring market structure. The SEC and the CFTC are coordinating. DeFi is being discussed as something that needs a compliance pathway rather than simply being ignored. And American policymakers are openly talking about making the United States a global center for digital asset innovation. That is structural. So here's the big picture. Let's zoom out all the way out. For years, the crypto story was about adoption. Then it became about regulation. Then regulation became about enforcement. Now we're entering a different phase. Financial architecture. Who operates the exchanges? Who provides liquidity? Who controls settlement? How are derivatives regulated? How does leverage work? How do tokenized assets interact with traditional markets? How do stablecoins interact with banks? How do DeFi protocols operate legally? How do blockchain networks connect to existing financial systems? Those are infrastructure questions, and infrastructure questions tend to matter for years, not days. That is why the CFTC announcement deserves attention. Not because it guarantees a bull market, not because it guarantees XRP goes to a specific price, and not because Congress suddenly became irrelevant, but because one of the Americans' major financial regulators just told the industry the market structure conversation is moving forward, with Congress if possible, and through existing authority if necessary. So here's my final takeaway, and here's where I stand. Watch September 15th. Watch the Clarity Act. Watch the Senate. Watch the SEC. Watch the CFTC. But don't make the mistake of believing the entire future of American crypto depends on a single congressional vote. Because the CFTC has now publicly shown the market that it's preparing for multiple scenarios. And that may be the biggest takeaway from this entire meeting. The question is no longer simply, will crypto get clarity? The question is, what form will the clarity take? Who will implement it? And how quickly will America's financial infrastructure adapt? And with Brad Garlinghouse sitting on the committee, alongside leaders from Coinbase, Uniswap, Chainlink, Kraken, Gemini, Robinhood, Solana, and some of the largest institutions in American finance, Ripple is clearly participating in that conversation. Does that guarantee XRP wins? No. But it gives us something much more valuable than hype. It gives us a developing institutional framework that we can actually watch. And remember, price is reacting, system is evolving. The price chart tells you what the market thinks today. The regulatory architect tells you what the market could look like tomorrow. And that is why this meeting matters. That is why the CFTC matters. And that is why the next few months could be some of the most important months yet for the digital American asset market. If you found this breakdown useful, hit the like button, subscribe to the channel, and turn on all notifications, because we're going to be watching every major development coming out of Washington. And most importantly, tell me what you think. Do you believe Congress will ultimately pass the Clarity Act? Or do you think the CFTC and SEC are going to continue building the framework regardless? Drop your thoughts below. I'll see you in the next one. Short-term noise, long-term structure. Price reacting systems evolving. Pay attention to what's quiet, ladies and gentlemen. And the crypto market structure story is just getting started. I hope everyone's having a blessed afternoon. I want to welcome all the new members of the Crypto Public Desk Monthly and the Patreon, all the new members of the membership channel. Some quick things I think are super important here right now. We've been talking about this in the RAM part of our videos for a long time. Here's the Italian ice. They're saying now on TV what we've been saying for a long time. They want less Fed meetings. They want the market to have more time to digest more of the news, right? Now, the coordinated assault on the financial war that is going on right now, why we told you Operation Printed to Win begin, all the financial pieces are being put into place. None of this is financial advice, just my own opinion, and it retains any capacity, not financial advice. They're being put into place right now to maximize the economic sanctions on Iran. Their currency is being crushed. Their country right now economically they can't really handle what's happening to the consumer there. It's terrible. Everything is terrible. War is terrible. The whole thing is terrible. But at the end of the day, our thesis remains intact right now. We believe silver will be $90 in 3 months. We're saying this right now. This will age very well. Silver, $90 in 3 months. Most of Wall Street banks are saying the same thing right now. People are moving into precious metals. They're going to inject so much liquidity into the market at the same time. Look out below. So at the same time, you got countries being sanctioned right now. If you do any business with Iran, and they're preparing to inject capital into the markets. The United States is being run by almost as a high-power hedge fund with sovereign vehicle and capabilities. When Operation Printed to Win, it goes into high gear, XRP, ICP, HBAR, equities are going to push higher. Follow me on this, okay? Ladies and gentlemen, if you want to learn how to be positioned for what we're talking about, come and join over 700 active traders invested inside the Crypto Public Desk Monthly. People are taking the deeper macro research. One tip from the pits pays for your entire year subscription. Learn how to sail with the alpha, because what I'm about to say is where the world is going, not financial advice. When technology stocks move higher, it drags Bitcoin with it. When Bitcoin goes higher, it drags all the altcoins with it. Risk coming in with it, right? So we see in coordinated assaults as oil stays in range. We believe oil will be between $85 and $75 in the next 2 months coming down. That takes inflationary pressure out of it. You got people talking about interest rate hikes. You have the biggest rope-a-dope going on in the financial markets right now, ladies and gentlemen. You have what the elected officials, our fearless leaders, are saying one SPAC. They're saying, don't worry, all is well. All is well. Ladies and gentlemen, all is definitely not well. Because when they inject the capital and liquidity into the market, the biggest rip your face off rally is going to come. It's happening now. I'm giving the pieces. How we don't get cut up like sushi and why the remora. Stay frosty. Gucci conviction. Gucci clarity. We're walking up this frosty mountain with our frosty beverage, ladies and gentlemen. How not to get caught up like sushi is not to FOMO anything. Don't chase levels. Right now, we're seeing a lot of leveraged positions get pushed out. People taking profit, waiting for the next push higher. As tech moves higher, software tech, it drags Bitcoin. When Bitcoin drags higher, it drags the altcoins with it. Risk comes on right now. See, I remember enough of my career starting at 15 to remember in the notches of my belt all the financial catastrophe that's gone on and all the times and positions I took advantage of from it. And the people that taught me, the early 90s, the carry trade, bought my first house, the dot-com crash. Oh my God, bought my first real yacht with that. And my first house in the West Indies. You got to understand something right now. The commodity bull from 2000 to 2008 ended when it fell apart. So you're looking at things right now that could be another upheaval in the markets. Stay frosty. Stay conviction. Conviction. That Gucci clarity is more important now than ever. Don't FOMO anything. No leverage. Wait for this. It's coming. Patience and time are on your friend. So as I wait for the final finality and answering one of the comments in the section, I will do this business until the day I don't open my eyes. And wherever I wake up, I hope that they have this industry. I love what I do. I love being a financial mercenary. I love helping everybody inside the Crypto Public Desk Monthly achieve what they're hoping to achieve. Being a financial mercenary, tired of just eating the scraps that are thrown to people, tired of watching the news channels blatantly lie to us, tired of watching people just read other people's Twitter feeds. Like Roosevelt said, it belongs to the man in the arena. The man in the arena knows loss. He knows gains. He knows victory. He knows triumph. He knows how to get down and dirty. He knows how to risk it all. Like I said before, ladies and gentlemen, being a financial mercenary is not about clicks. It's about winning so our families eat, our benefactors eat. I will never throw money at anybody. I love everybody in the XRP Army. I love everybody that makes videos. None of this is financial advice. This video is for educational purposes only. Always consult a licensed financial advisor before making any economic, financial investment decisions. Never invest a single dollar from watching a YouTube video. Don't ever invest a dollar from watching a YouTube video. I love you all, ladies and gentlemen. I'm going to see you on the front lines. But I tell you this, why I always say we make a living, but we make a life, but we get to other people, because this financial notch on the belt is going to eclipse everything else. This is the event horizon, baby. I love you all. I'm going to see you on the front lines.